Please punch up DraftKings, ticker DKNG. This was a miss on the top and the bottom line and a guidance cut yesterday. But guess what? They're trading up 3.5% here this morning. So it sure looks to me we had a bad earnings print, and it's not really moving down anymore.
Yeah, so there's your psychology. And this is actually a little bit of an interesting thing because we just talked about the old ascending triangle pattern. And you could kind of see that here, right?
Yes, sir.
So we have a situation where the price level, and again, we always want to know where these important price levels are, right? So right around 36.25 became support here. And when this happened, a lot of the people who sold said, I made a mistake. If it ever gets back, they said they made a mistake when the price rallied. If it ever gets back to my level, I'm going to buy my shares back. So remorseful sellers from here, placing buy orders here, made the level that was support become support again. And then you see the same thing happened over here. Then the stock breaks the support and goes lower. And at this point, buyer's remorse kicks in. A lot of the people who bought at the support are like, I made a mistake. And if I can ever get out at break even, I'm going to. Now, this might be hard for people to see here, but this line is $36. Yesterday's high trade was $36.11. On this day, the high trade was $35.96. So right around this 36 level. And this morning we could be breaking it. So a common strategy that traders use, see we're trading up here, is called a breakout. And the idea is that if something is trading below a resistance level, you don't do anything if it's just below it, because at any given moment, some of the people who created the resistance with their sellers can start to say, I'm sick of waiting around here. I think other sellers are coming into the market. I'm just going to reduce the prices that I'm willing to pay. And that can start a snowball effect if other anxious sellers see that and do the same thing. Now, the concept of the breakout, and this could be a breakout here, is if you trade above the resistance, it could be an indication that the people who created the resistance with their sell orders, whether they're traders or investors, are out of the way. They finished. So if you take a large amount of supply off of a market and then the buyers come in, they're going to have a hard time finding sellers. So they're going to be forced to really jack the price up and outbid each other. So this here looks like a pretty interesting idea. Now, if I was going to trade this just as a trading idea, my target would be right up here, because we know a lot of times when you get to a level that was resistance, there's resistance again, just like happened down here. And this is because of buyer's remorse manifested in a different way. There's people who bought up here who are like, oh, this sucks when it goes lower, but they basically say, I'm going to hold on to my losing position, but if I can ever get out at break even, I'm going to. So if the stock gets back up to here, there's a really good chance there's going to be some resistance there.
Sure.
I would buy it here. I would think about selling it up here, or I should say I would think about buying it. I don't want to give any official recommendations. Then if you reverse back below 36, you say, all right, well, I'm just going to get an initial, I'm going to take a little bit of a stop out here because maybe my timing's wrong and I'm going to take a small loss and move on. And then if it starts to go your way, you put in a trailing stop. One of the things that a lot of, I think, newer traders don't understand is even the best traders in the world take losses. They don't have these like secret methods that are always great. So the difference between the people that are successful and the people that aren't is the people that are successful take small losses. They get out of something before it gets out of hand.